Hi, Darin Mangum here, the PPM attorney. Today I wanted to talk about a question that I get asked quite a bit from clients, and oftentimes when they're putting together a project or a deal, I'll get the question, should I do a debt offering or should I do an equity offering? Uh, if I'm doing a debt offering, typically those are promissory notes, either convertible debt, sometimes a bond offering of some sort, those kind of instruments, and then of course an equity offering could just be straight up equity sharing arrangement, or possibly whether it's LLC interest or whether it's a stock in your company, or if you're putting together a private investment fund, is it going to be a preferred equity interest in the fund? So those are sometimes questions that I get. The answer to that is really going to be based upon the financial forecast that you put together, and it doesn't have to be a super complicated one, but certainly the more assumptions that you make in a financial forecast that you're able to build into the model, that's really going to tell you whether you're going to be able to say support a debt type offering, whether you're going to be giving monthly, quarterly, semi-annually, or annual payments to the investor. And if there's enough cash flow in the project, certainly the debt offering may make a lot of sense, and you don't have to give up a lot of the upside. At the same time, a debt offering may not make sense, especially if it's a long-term project where you certainly don't want any kind of debt instrument coming due when the project's not totally finished yet. So maybe a preferred equity type offering may make sense. And then sometimes, so a lot of clients don't know that you could offer both. You could give investors a choice. You say, hey, look, we're offering debt on these terms, and then, hey, but if the debt isn't of interest to you, then we can certainly give you an equity interest on these terms. And so you can certainly offer both at the same time through the same PPM, through the same offering. And so the answer to that question is going to come from the financial forecast that you're going to want to put together for the deal. And oftentimes I'll recommend to clients at least put together obviously put together what you expect the offering to do if everything goes like you expect it to, but then also build a low case type model that said, hey, what if it takes longer? What if it costs more? Running those type of numbers, and then you could always certainly do a high case scenario, but at least do a low, mid, and high case scenario. And even when you're promoting the offering to investors, that's something certainly you can deliver to them and give to them, and says, hey, look, this is we've run different models on this project, and this is kind of how it pans out. So again, the question, should I do debt or should I do equity? Maybe the answer is always in the numbers, and sometimes the answer is, well, maybe you can offer both. If both, if the investor, or again, at least have the investor be able to choose which one works best for them. And so certainly, whenever you're structuring a securities offering, you always want to say, hey, you want to put yourself in the investor's shoes and say, okay, if I was investing in this, what would I like to see happen as far as a rate of return? What would be competitive and things like that? So anyway, if you want to talk about your particular offering, obviously, you can always certainly give me a call, and we can go through your particular project, your particular fund that you're putting together, and certainly make structure an offering that may make sense. So feel free to reach out to me, Darin Mangum, Darin at theppmattorney.com, or you can certainly give me a call on my cell phone is 801-787-9072. So anyway, hopefully this is helpful, and thanks for watching.